Aman Chowhan as well joining in from Abakkus Asset Managers. Aman, hi, morning. Good to have you on the show. Um, Aman, what are we witnessing right now? A bit of a correction in an otherwise intact bull market?
It's profit booking, not just correction. People have made decent money, very strong gains in the last 9, 10 months now. And we'll see rounds of this where it's a herd mentality. If you feel that markets are going to correct 5%, you would like to book profit, then we want to re-enter 5 or 10% lower. So I think it's just one of those phenomena which is just playing out for the last few days.
Aman, but that aside, tell me what's happening within private banking names. Now, HDFC Bank, of course, is a standalone case. One understands that. But the market is punishing inline numbers like an Axis and IndusInd as well.
So this is something which is we were surprised the way Axis Bank and the IndusInd Bank corrected yesterday and today, because there was no reason per se. And from a valuation standpoint, also financial is one pocket where relatively there's still a decent risk reward equation. I think it's overowned. Maybe too much of ownership. It's liquid names. If somebody wants to book some profits, this is the best way to do it. Maybe these are the technical factors that is leading into it. Otherwise, from a fundamental standpoint, I don't see banking to be in a negative shape for stocks to react so much. So, from what we feel, it looks more of technical than a fundamental reason for stocks to correct this way.
Aman, what are you doing with your portfolio right now in terms of financials and the other sectors as well? Is it a bit of a churn that you're doing? Because pharma and FMCG seems to be those defenses that people are now flocking to.
Not really. It's not a big churn person. So we continue to like private banks. We continue to be very selective on these large PSU banks. We don't have any small PSU bank exposure with us. And one change you can say that we have added non-fund based financials like wealth management companies into our portfolio in the last month or so. So in fact, overall, we have increased our exposure, but that increase has been more to do with non-funded financials coming in.
You mean the NBFCs of the world, or you're talking about those stock market ancillaries per se, the financial
Well,
services?
yeah, broking companies, wealth management companies. So
Aman,
that's
hi.
where we have increased our exposure.
Aman, hi, morning. Wanted to also get in your thoughts then on the flurry of companies that hit the public markets last year. There were a number of companies as well that made it, and this year there are some big companies as well slated. How have you looked at the overall valuation picture? Any interesting IPOs or recent listings, and the performance of some of these new age tech companies?
Not much. Since we follow a value conscious style of approach, we find most of the IPOs are like price to perfection. So we are not very active in the IPO space. Uh, you can say that we are more active on the QIP. In the last 2 months, there have been lots of placements by the companies where we have participated. So we have been more active in pref and QIPs than on the IPO side.
Aman, I see in your growth fund as well as the emerging opportunities fund, you're very heavily skewed towards industrials. And I'm guessing from industrials, apart from the names like L&T, etc., there might be some, names like railways, defense as well. Talk to us about what you're doing within that space now, because that too is getting very overheated and over exuberance seems to be seeping in.
True. So defense clearly looks overheated. We don't have much exposure. That will be like low single digit. Same thing with railways. We have exposure, but it's less than 5% of the portfolio. Within the industrials, we have cap goods, we have cement companies, we have that segment where we are very bullish on, and that's where bulk of the investment is. So specifically to defend the railways, I'd say low single digit would be the exposure there, and that exposure is also at prices where we are comfortable. So we are not gone ahead and bought something at a ridiculous price. So happy to hold what we have.
But, Aman, what we are seeing is, of course, railways is just one segment of it. You're seeing profit taking across the PSU pack, be it power, ancillaries, and, I can go on, highlighting the list of the PSUs and X banks is what I'm talking about over here. Do you think that as a cluster was getting a little bit overheated, much like the railways?
Yes, it was. So if stocks double, triple within a 2, 3 month period, then obviously there has been very sharp gains and people would come in and want to book profits. From an absolute price, I might not feel that the stock is overheated. But if you have already discounted 3, 4 years numbers right away within the next last 2 months and The stock is already up to 3x. There is a chance that people will come in and book profit. So the gains have been so huge that even a 10-20% further correction of price profit booking from these levels also, stocks will be still decently priced. So I won't be surprised the way there have been some profit booking. Just been a few days. The stocks have been rallying since almost 9-10 months now. So I don't think one should be get too worried till the time we are with the right company. I think staying put in these names makes sense. Just that in the very near term, it was a very sharp up move, and that's getting corrected.
Aman, what about the outlook when it comes to the liquidity situation, given that we were hinging on support coming in from the foreign institutional investors? Just a few weeks into January and we haven't quite witnessed that. Is there a worry that it might not come through, or are we pretty confident that as the months progress, we will see the FIIs buying in?
We are confident that FI should come in. We also, it's a wait and watch when they start coming in. We also closely monitoring the data. Globally, if you look around, India stands out. It's one of the fastest growing economy. We are not expensive, though we are not cheap, but we are fairly priced. There's no reason why FI money shouldn't come in because they also have lack of other opportunities. They are not investing to China. If you see last year, most of the neighbors had a negative return, like CY23. China markets had been negative, Thailand was negative, Malaysia was negative. So there's not much of option for FIs also who are investing globally, but to look at India. So I'm pretty confident that FI money should be positive this year also for India, especially once we enter into the election mode and the current government gets re-elected. I think that is also going to be a big boost for the money to come in.
Like that's already in the price, Aman, a continuity of the government.
Bit of it is yes. So it can also. I don't think anybody is waiting for April, May, or June for the election outcome to come in before putting in the money, right? So it's a consensus right now that Modi is getting re-elected, kind of thing, at least in the markets. And yeah, people are positioning ahead of that. So in the next month, I think the positional trade for the election should happen.
Okay, so that's about how the elections are likely to pan out, or at least what the street is factoring in right now. But Aman, I also see in one of your top holdings name like PolyCap come into the picture. I know you can't talk stock specific to a great detail, but I just want to understand, how do you approach when an issue like this really crops up? How should the retail investors as well as the institutional investors like you approach this?
So first and foremost is wait for the right data. So right now what we have is nothing official. So there is no notice to the company specifically, and hence one should first understand the gravity of the situation rather than jumping in, because this is a long drawn process. There are always uh, claims and counter claims that keep on coming in, and this is not something which is unique to one or two companies. Every few months there is something like this which keeps on happening. Many times it is genuine. Many times it gets nullified. So our advice is the way we approach is till the time there's decent clarity, we don't act.
Okay. Till the time you have clarity, don't act in a hurry. But I mean, you also keep on hunting for the turnaround stories, right? Anything specific that's caught your attention?
Not off late as such. There was a time when there were good turnaround in the metal space, but most of them have turned around. From a sectoral standpoint, I think the next few quarters there will be turnaround in the chemical space. So this is one sector which is seeing lots of headwinds, both on pricing as well as on margins, both in the bulk as well as in the specialty chemicals. And I think in the next 1 or 2 quarters, things should start to bottom out, and this can be a good turnaround sector or opportunity one can look at.
Okay, and what's your view on IT right now, and even pharma for that matter? Are you looking at increasing your exposure there as well?
IT, we continue to stay neutral. So we never went underweight when there was a slowdown. So we always had a decent exposure in IT, which was like high single digits. We continue to maintain that. We have not added any new names per se. We can say we are neutral. Maybe if we get a absolute opportunity in the next 1 or 2 quarters, we'll look at it. Pharma incrementally, we are getting positive. So over the last 6 months, we would have added to a pharma exposure, and looking forward to further increasing that.
In what nature? Is it hospitals and healthcare? Is it diagnostics? Is it the export-oriented names or the domestic ones?
Mostly export oriented names. because that's where the maximum damage was, and that's where the turnaround, or that's where the recovery will be there.
Okay, Aman, great to have you on the show. Thanks as always for taking the time out and chatting with us.
Sure. Thank you.